Welcome back. Welcome back. You're watching the Mutual Fund Show on NDTV Profit. We're having a conversation about mid-cap and small-cap schemes and whether or not fund management has changed over the course of the last 12 months or so to account for the volume of inflows that these schemes have received. To talk about this in more detail, I'm joined by Kaustubh Belapurkar, CFA and Director of Fund Research at Morningstar India. Kaustubh, thanks so much as always for taking the time and speaking to us on the Mutual Fund Show. I want to ask at the start, at the onset, the kind of inflows. So we've seen thousands of crores flow into this scheme categories as a whole, but which schemes have received the most funds? That data itself is quite telling.
Yeah. Firstly, hi, Alex, and thanks for having me on the show. And I think very interesting conversation, obviously in the backdrop of what's been happening over the past year, and in terms of obviously the news and the circular that's come out. So a couple of things, right? So one is, I think the last few years have been interesting from the perspective of obviously equity flows, SIP flows have continued to grow, which is great. But I think what we've also seen is slightly outsized allocation towards mid and small cap funds, as you would see in the flows, especially I think 2023 being a classic case in point, where I think small caps were probably the largest category in terms of absolute flows that came in the calendar year, right? And mid caps probably weren't far behind, probably amongst the top three categories. So obviously, in terms of exuberance from investors in investing in these categories has gone up. And funds have been the beneficiaries of these. And if you look at it, obviously there are several funds that have gotten outsized flows over this period of time, some which are already quite popular and large, and some probably upcoming, right? So if you look at some of the data and we track the inflows into some of these funds, stripping out the market movement. So that's important to think about it as a net inflow that comes out of these funds. You would see the likes of a Kotak Emerging Equity on the mid-cap side, the HDFC mid-cap opportunities, which is in fact the largest mid-cap strategy around, SBI Magnum mid-cap, the Nippon India Growth Fund, the Motilal Oswal mid-cap. I think these were like the top five, which received north of about 2,000 crores in the last 12 months in terms of the overall flows. The same thing is actually even more staggered on the small cap side. So, from the quant mutual fund house, they had the quant small cap, which actually received about 8,000 crores, and their fund size has actually increased multifold over the past couple of years. And 8,000 crores in a single year is pretty staggering for a single fund that we've seen, especially on the small cap side. HDFC, again, I think about close to 5,000 crores. And there's several other strategies from Nippon, Axis, Canada Robeco, which again, north of 2,000 crores. So if I just put things into perspective, obviously, I think, again, what's happened is, the category by itself has gotten a reasonable amount of outsized flows, and certain strategies within that, have probably received a lion's share of the flow. So it's not been a one size fits all, because you would see funds that have also lost AUM, the ones probably which have, in the recent past not done so well. And, the typical sort of investor, behavior where they would look to buy funds that have done well recently. And I think that's also kind of played a part in, certain funds getting outsized flows from that perspective, right? So that's more about how these flows have kind of stacked up. I just want to take a step back in this whole discussion and think about putting some data there in terms of, remember, obviously small and mid caps have grown in terms of the overall assets that they manage. They're at about, if you just look at equity funds and all, I think they're about 24% combined of just small and mid cap funds. Remember, there are other types of funds that also own mid and small cap stocks, be it a flexi cap or a multi cap or a focus fund, which would also have reasonable allocations to these counters, right? So just purely from a SMID perspective of the funds, it's about 24%. And if you add the others, it'll probably, you'll probably get a much higher number than that. That's one. But I think what's important is the market overall has also grown, right? So I think that's also important to put into context. Looking at the other side of the coin is, when SEBI, for instance, introduced the categorization and where we lying today, I think the large cap buffer itself for the top 100 stocks, it was about 29,000 crores, if I remember right, back in 2018. It's at 67,000 crores today, right? So it's that, even that needle has moved. The number of stocks that can qualify, especially in the small cap space, because that's an open sky sort of definition, that's also gone up quite significantly. I think it's north of almost about 450, 500 small caps that are probably more than 2,000 crores on care. So I think the space has grown. Obviously, the flows have been pretty significant. So, just putting that into perspective is how we need to look at this data.
And right, one of the points that you made was quite striking in that some of these schemes have gotten the lion's share. Kotak in the small cap space, and you're talking Quant in the small cap space. We're talking about what 42,000 crore over the last 1 year or so in the category as a whole, and 10,000 of that or 8,000 of that close to is in one scheme, which is quite significant. Now, another aspect which I asked you about was turnover ratio, and this is something that signifies the kind of churn in in portfolios. And we're talking about a few schemes, including Quant, which I think plays into its strategy, Kaustubh, very, very elevated. And obviously, for somebody who's looking at this data over a period of time, what do you gauge from these elevated turnover ratios, which means the elevated churn in these portfolios?
Sure. So I think largely when you look at the data, right, Alex, most of the mid and small cap funds are kind of buy and hold strategies. And I don't think we've seen significant change in the turnovers. I mean, a huge delta, so to speak, from what they've historically managed. And like you rightly alluded, Quant, by the virtue of its strategy, is a high turnover, in the way they manage their portfolio. So, that is, in a way, obviously, they will have significantly higher turnover ratios than many of the others. It's a part of their strategy. Whether they can do it at a much higher size AUM, that's probably a discussion for another day. But, I think the point being that I think largely the turnover, I mean, just the way the number is calculated, I think I wouldn't say it's outsized. It's probably gone up a few ticks, but nothing that I would significantly worry about. I think it's more about thinking about fund capacity. And there's a distinct difference when we think about what liquidity and what capacity is, and I think that's the crucial point that we need to think about when we look at funds, especially in spaces like the small cap.
In fact, that was going to be my next question, because the landscape, as you pointed out, for fund managers to paint in has gotten larger, has gotten significantly larger, and that's evident in the stock holdings of the small cap funds in particular, where you've seen, for example, I'm looking at the Nippon India Small Cap Fund, which currently holds 205 stocks, and that has gone up by 38 stocks over the last 1 year. That's also very telling, and that means that fund managers have a very different approach than they had a year back to investing in this particular category.
Yeah, so I think it's also about I would say yes and no in a way, Alex, because what's important is also kind of, so when we talk about capacity, right, there are a few things. So one is that the whole discussion around capacity is that can you continue to manage your strategy in the way you envisage, or the way you think is what signifies your investment process? Can you continue to do that consistently, or does size become an issue in the sense that and it doesn't necessarily always underpin on the number of stocks that you're buying, but the underpinning philosophy of what are you looking in the stocks, right? So I mean, if you're a guy who's probably looking at X percentage in ROEs, good, reasonable quality of management, this kind of a growth metric and all of that. And if you find companies beyond that, obviously, I wouldn't mind a manager who does that, and they're probably de-risking by buying smaller bets, especially in a space like small cap. Because I mean, there are two things, right? One is you don't want to take very, very large outsized bets in terms of your own portfolio. And B, secondly, you don't want to own too much equity of the fund, right? Because remember, if you're a 50,000 crore fund, if you're buying even 1% exposure in a stock, that's a 500 crore exposure. And that's 500 crores of a 5,000 crore company. That's actually 10% of the company's equity, right? I'm not even talking about free float, which is a pretty significant chunk to buy or own, right? So I think going down the curve, as long as you're not diluting your core investing process, I don't see necessarily a problem with your stock holding increasing. But yes, I mean, it needs to be put into the context. If we just look at the financial metrics of how a portfolio would look, does it look, reasonably similar? Then, that's fine. I don't particularly mind. yes, long tails can have their own issues, but sometimes in a space like this, it's okay, right? So, but you need to look at it in that context when you try to evaluate a strategy.
Fair point. The last takeaway, and this is perhaps the most important question, but necessarily has to be a quick answer because we're running out of time, is based on all of the data that we've just discussed, what does the investor take away? How do they change their portfolio if, for example, they're holding units of some of these larger schemes?
Yeah, so to be honest, as a retail investor, I won't pay too much attention to, because these stress tests are useful from the perspective, obviously, the risk management framework for the governance and the board to make sure that the investment team is doing what they envisage. And if there are capacity or liquidity issues, can you kind of take a decision and take that hard decision to stop flows, right? So which a lot of, I think, small cap funds have proactively also looked to do that, which is a great thing. From an investor's perspective, I think going back to the drawing board, think more about from what are your risk return objectives. If you're oversized positions in small and mid caps just because it looked very great from past returns perspective, I think now's a good time as any to start reducing that exposure because we've seen the kind of volatility that small and mid caps have displayed in the past, and there's it won't be any surprise that if they do that again in the future, right? So I think that's most important. Focus on your asset allocation, and that will be, you should be fine with that. Leave the, the risk management and the sort of fund, sort of select framework to the fund managers and the advisor who's probably telling you. Focus on your asset allocation. I think that should be key.
All right, and that's a good note to end this show on. Kaustubh, thanks so much for taking the time and speaking to us on NDTV Profit. Viewers, it's been an absolute pleasure bringing you this show. If you've got questions for us, do remember to send them to us on that number on your screen. That brings us to the end of this particular edition of the Mutual Fund Show. Do stay tuned. This is NDTV Profit.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.